Real estate and stocks are fundamentally different kinds of assets to invest in. If you're trying to choose one versus the other, there are a lot of trade-offs you're going to have to make. Now, that may not be necessary. It's certainly possible to have a portfolio that has all sorts of different kinds of asset classes in it. But if you do find yourself making this choice, here are some things you might want to consider. Today, we're going to talk about investing in real estate versus stocks. There are ways to invest in real estate and stocks at the same time. In fact, there are some publicly traded companies that are in the business of operating portfolios of real estate that you can essentially buy into. These are called real estate investment trusts, and some of them are listed on public markets. However, you may find yourself making a decision like this, and if you are, it's important to think about a number of factors. Before we go into them, I want to note that I'm not a financial advisor. This is not personalized advice, and you're going to have to make a personal decision. This is a really high-level overview. Hopefully, it gives you a sense of the things that you're going to have to think about along your own journey. So let's talk about this in two sections. Real estate first, and then stocks next. We're going to talk about the relative strengths and weaknesses of each. So for real estate, one of the most important things to think about is its utility. Real estate has a utility that many other asset classes don't have. You can live in a house. You buy the house and it actually has utility for you. You can do things with the property. That's great. But on the other hand, you also have real responsibilities when you own real estate, like real world physical responsibilities. Say a pipe bursts, you got to deal with that. Say the lawn's overgrown, you got to deal with that. These are things that can affect your property. It can affect the long-term stability of your investment. And you have to think about that in a way that you may not have to with other asset classes. Another really interesting thing about investing in real estate is that it's relatively easy to do using borrowed money. So you've all heard about taking out a loan to buy a house, right? That's called a mortgage. It's not, a particularly novel thing to do. There aren't that many people who have hundreds of thousands of free dollars that are lying around waiting to be invested in one thing. And people who do have that amount of free cash may choose to invest it in other ways. Now, on the other hand, if you're using borrowed money to invest in, say, stocks, that's often called margin trading. It can be quite risky because if your investment goes down, you can be in pretty deep water with the debt on top of your investment losses. If you make money on it, it can actually be kind of profitable, but it's certainly not for beginners, and it's not the first choice for everybody. So once you do decide to buy property, though, one of the really compelling things about it is that it is pretty stable compared with other kinds of asset classes. In fact, in periods where there are rising prices across the economy, periods of high inflation like we've been seeing recently, housing is often looked at as an inflation hedge because it often rises at the same rate as other kinds of investments. So with all that said, the benefits of housing come at a cost. Everything's got trade-offs, and one of the big costs of housing is it's not very liquid. Now, what does liquid mean? It means it's hard to sell. It's hard to get your money back compared with other kinds of investments. So say you needed the cash that you put into your house. How would you get it back without, taking on more debt? Well, you'd have to sell it, and then you'd need a place to live. And of course, anyone who's bought a house or sold a house recently knows there's a lot of transaction costs, a lot of friction in that process. So that's something you really want to think about when you're thinking about sinking money into real estate. It's not super easy to get that money back, even if the equity you have, if the value of your investment goes up. Now, talking about liquidity is a great time to get into stocks. So let's talk about some of the considerations of stocks, starting with liquidity. Buying and selling stocks is very easy compared with buying or selling a house, for instance. So, you can do it by calling your broker. You can do it by logging into your online stock services. There are plenty of ways to buy and sell real estate that are pretty simple to do. In part because of the ease of transactions, stocks tend to be quite volatile compared with other kinds of investments. You may see prices of single assets go up and down quite a bit, or even whole market swings, of multiple percentage points over the course of a day. It can be quite stressful to look at. So, that volatility can be a benefit if you time the market correctly, but as we all know, timing the market is no sure thing, and lots of people who try to do it fail. So unless you have a long-term plan and you're taking a longer view of the market and a longer-term view of your investments, it can be kind of a roller coaster ride to invest in something with that much volatility. Now, Another thing to think about with stocks is diversification. So diversifying a portfolio of stocks is pretty easy compared with housing, for instance, right? So you could buy a mutual fund that has exposure to lots of different things. You could buy an index fund. You could buy an exchange traded fund. These are all different ways to buy big portfolios of stock. Of course, you can build your own portfolio, which has its own risks and benefits. All that said, housing is not impossible to diversify. You can buy, as I mentioned before, you can buy a real estate investment trust share, and you're kind of investing in a broader portfolio of real estate. But it's not super easy to buy multiple properties in multiple markets that are not subject to the same market forces that you might want to insulate against. Again, diversification in any kind of investment is a way to insulate yourself against the effects of, any kind of specific pressure that a part of your portfolio might face. So having talked about real estate and having talked about stocks, one thing to remember for both is that every investment is going to have its unique tax considerations. So whenever you're thinking about buying something, it's worth thinking about how that's going to affect your taxes. Put plainly, if you buy something and sell it for more than you bought, you're going to have profit, which is income, which is taxable. Now, depending on how you bought and sold it and what you bought and sold, it could mean a lot of different things for your taxes, but when you're making money by investing, you're making money, which you have to pay taxes on. So that's something to remember. Now with property, you're also going to have to think about property taxes. And there's all kinds of considerations for that based on what kind of property it is, where it is, and of course, whether you live in it. A lot of municipalities and jurisdictions will give you a little break on your real estate taxes because you live in the property rather than rent it out or own it as just an investment. So that's something to think about. All that said, real estate and stocks are just two of the investments that you can think of, but if you do have to choose between them, there are some pretty clear considerations you make. Now, you don't have to choose. You can find ways to invest in both or kind of bridge the gap with some of the investment options we spoke about previously. But anytime you're making a choice with your investment, it's worth thinking in a clear way about what it is that you're buying and why. I'm Andy Rosen, an investing writer for NerdWallet. This video is part of our Versus video series, so if you're comparing other financial options, be sure to check out our channel. And if you learned something today, please like and subscribe.